The next one I'm going to talk about is the bank statement program. So bank statement programs are essentially designed for self-employment customers who may have some losses reported in their tax returns or just cannot check all the boxes with your standard Fannie Mae or Freddie Mac for your program guidelines. So what do those self-employed customers do? Well, with the bank statement program, you can take the business deposits and using some of the methods, you take 50% of the total deposits and that's your income. So it really is a nice fit for those customers who may have some losses reported on their tax returns, but with a business that is still operational and ongoing to use those deposits as income. So the cash flow method is the most preferred. You take 50% of the business to business bank statements. And if they want to use those for down payment or closing, they just need to own 51% or more of the company. So that's very important as well for the funds to closing for business assets. Example of 12 months, let's say total deposits over 12 months is 420 grand. They own 50% of the business. So that's $210,000 in deposits. You take that amount divided by 12, so 17,500. And then you assume a 50% expense ratio, right? As much as with small businesses would love to have zero expenses, that's just not the nature of how these things work. So you assume a 50% expense ratio, and then that number gives you an 8750 overall qualifying income. And there you go. That's your income. So very simple. So if you go on the counterpoint, let's say the total losses for this company were 120,000, just to make the math easy for last year, you would divide that number by 12, and it would actually be $10,000 per month in losses for either Fannie Mae, Freddie Mac, or FHA for their boxes to check. So you compare a $10,000 loss versus an $87.50 income amount. That can make or break for self-employed customers looking to generate business and qualify. So it's a very good program and very strong as well.